we have people that are still coming in as participants, and we have people from the Midwest and the East Coast and the West Coast. So I get to say good morning and good afternoon. We are just so happy to have you all with us. On behalf of the partners at Boyum Barenscheer and our entire COVID-19 team, we just want to thank you for taking the time over your lunch hour to join us to learn a little bit more about what the SBA put out on Friday night and what we went over on the weekend. We know that we're in this crazy time of having to adapt and change, right? It's not only in our business or nonprofit or in our church, but even in our personal lives. And so we here at Boyum have this COVID-19 team reading and learning and getting everything ready for you so we can hopefully bring it in a nice summary fashion so that you can take a little bit of that worry off your plate and spend the time needed to get your business ready for this next stage once we get everything opened up and back working again. So with that, I need to do just a fast disclaimer on information changes. It seems to be by the day, certainly, and sometimes more than one time a day. So just know that what we bring to you today is what we know as of now. And so we're giving you the guidance and trying to help you through what's out there, and know that it will change, but we will keep up with that and continue to update you as that's there. So I am Stacy Shaw, for those of you who don't know me, and it's been fun to watch people come into the room and recognize so many names. It's great to have you with us. And I am a partner in our business advisory and client accounting services area, also very active on the COVID-19 team. And I'm just happy to be here. And I get to let you know who else is with us. Chris Whittick, he is a tax partner. Many of you know him as a tax tiger. He's going to present with me today, so it'll be fun to have him join us and give us some thoughts. And then the next on the team, we have Randy Feld. He's an audit partner. He is waiting in the wings on the panel along with the rest of our team. So as you put things in the Q&A, we're going to have everybody helping us respond, typing answers, or we'll answer some of them live. So thank you, Randy, for being with us. And next is Barb Soddy. She is another partner with me in the business advisory services area. She is here for all things employment. So thank you, Barb, for being here with us. And next we have Tiffany Shermack. She is an audit senior manager on our team. Same thing, she's here ready to answer questions. Definitely has a lot of guidance for our nonprofit area in our churches. So thank you, Tiffany. And Larry Davidson is also on the panel ready to answer questions. He's an audit senior manager with us, has a lot of background in real estate. So you may see him answering some of those real estate questions. And last, if not least, we have Nick Swedberg, also another partner with me in our business advisory services area, knows restaurants and breweries back and forth. I'm going to kick it over to him quick. He's going to give us a few housekeeping items.
Awesome. Thank you, Stacy. Just very quickly, we're approaching 500 people on this webinar, so we're going to try to keep up on the Q&A. And the Q&A, if you haven't found it, is on the very bottom of your screen. There's a nice little chat bubble there, and there's already been a few questions. If you could take a quick look through that before you post your question, I'm sure a lot of you are going to have very similar questions from the new guidance that came out. So if you see something similar to what you're asking, if you could give that a thumbs up, there's a button right on every question where you can do that, and that'll just push that up our list and give us a good idea of what most people are wondering at this moment. We will have this webinar up within 24 hours after this is over, along with a copy of the slides. So that's a very common question. So just keep up on our website. We are updating that very frequently. And like Stacy mentioned, there is a group of us keeping up on this Q&A. I don't expect we'll be able to get to all of them because there is 30 minutes at the end where we'll answer some of the more common ones live. But we're going to just do our best to address your question. And if we don't get to it, just know that we're around and we'll gladly talk to you after this webinar is over. And I'm going to go kick this back to Stacy again, who is going to go over our agenda.
Thank you, Nick. You guys, we have a packed agenda today, as you can see from this slide. Most times I don't like to have a lot of information, but today the slides are full. And we did this so that you have them after this presentation as well, so you can look back at them. The good news is there were a lot of helpful things that came through with the SBA, the press release and the guidance they put out. So we're going to go through the PPP Loan Forgiveness Application overview. And for those of you that are on that have not applied yet for the PPP, this might be a little bit over your head, but at least you'll have some information for when you get the PPP and get to the point of needing the forgiveness. And then we'll go through the 8-week covered period. And a big change on this was we also now can choose an alternative covered period. So we'll go through details on that. And then for payroll costs, big changes on that. We had the incurred and paid before. Now they put the or in there. So incurred or paid. So we'll definitely go into details on that. Non-payroll costs, same thing with that. We got different verbiage for incurred or paid. We'll go through information to bring you up to speed. And then the wage reduction limitation, updates on that will be given today. The FTE reduction limitation, same thing. We have some updates based on how the FTE is calculated and making it a little bit more simplified for some that it's helpful for. And we have the 75% payroll cost limitation based on the funds used. That'll give you, we'll have an example on that. And then documentation is key through all of this. We have a few slides actually on what they're going to require for us to either submit or keep. And then Chris is going to wrap up then with some closing thoughts that the COVID-19 team put together and leave time at the end for the Q&A. So with that, we're going to jump right into the PPP application overview. So it came out Friday night. Our team got real excited about reading for the weekend, and we read through it to understand it. So it's an 11 pages that has forms and tables and step-by-step instructions. And then the biggest piece is the loan forgiveness calculation form, which is the actual application itself, but then it goes into separate schedules with worksheets and tables. We'll be going through every bit of those. There is a representations and certifications page that needs to be initialed and signed off, just like on the application. They have an optional PPP borrower demographic information if people want to do it, but biggest point here, SBA will still be issuing more regulations and guidance on this. So again, we have more information, but not all of it. We will keep working through this as best we can. On the application itself, I'm not going to even spend much time at all on this slide. It just talks through everything that's needed. So whatever you put for your business name and information on the application, you would put the same thing on the forgiveness piece. And here they want the 2 loan numbers, SBA and your lender PPP number, the amount, and then the employees at the time of the loan application, and then at the time of the forgiveness, disbursement date, if you got the EIDL advance, if you have an EIDL application number, payroll schedule, the period that we talked about, which will go into more detail, which one are you picking, and if you got over 2 million, make sure you check the box on the application. We wanted to make sure we showed you what it looked like. So seems like a pretty simple form, right? As you look at it on this screen, we gave you the link as well. The SBA says, oh, should take an estimate of 180 minutes. I spent all weekend on this. I would say if you have 1 employee, maybe, but for most others, you're going to put a big factor on that 180 minutes and maybe a factor times 10. But remember, we're here to help make that more simple for you. And that takes us into one of our biggest changes, that 8-week covered period. We've talked about that, right? So the original covered period, which you'll see CP in further slides, just remember that that's your 8-week covered period. The first day is your loan disbursement date. And so an example, you got your loan proceeds into your bank account. And remember that disbursement date is the date you got the funds in your account, not the loan date or anything like that. So if you got it Monday, April 20th, the first day is going to be April 20th. And then the end of the 8-week period is going to be Sunday, June 14th. So that's how you'll look at that to figure it out. But now they said, hey, we're going to allow this alternative payroll covered period. Here, this is a big deal, you guys. So those that are taking notes, it's those that have bi-weekly or more frequent. So I'm sorry, if you're bi-monthly or monthly or quarterly or annually, this does not apply to you. So it's those that are bi-weekly or more frequent. You can elect to start your 8-week period beginning on the first day of the payroll that follows that disbursement date. So you'll look at your payroll schedule, look at your disbursement date. Let's say you got the funds on April 20th, but your first day of the first pay period after that doesn't start till Sunday, April 26th. You can now elect this alternative payroll covered period to be April 26th, which would then make your last day June 20th, which as we go through the other slides, you'll see that there's going to be some strategy around this. So remember, we're going to make the best decision as it relates to your business and getting the most use of funds and forgiveness. So we will be here to help with that discussion. And then make sure that whichever period you use, you need to apply that everywhere on the application that talks about either the alternative payroll covered period, or if it talks about just the covered period, you may have some differences and changes. So again, nothing's ever easy as it relates to the government forms, but we are here to help you through it. And now the biggest piece, obviously, of this program and this form. Remember, the PPP is made for the Payroll Protection Program. We are using it to pay our employees. We want to get them back on our payroll and off of the unemployment. So obviously the payroll costs are going to be an important part of this as you move through this 8-week period. And they put out an extra interim ruling for us. So they said, okay, the costs that are included are compensation to employees who reside in the US. So they can't reside outside of the US, which relates to their salary, wages, commissions, or similar compensation, tips, or equivalent. A lot of people say, well, what about bonuses? It doesn't specifically say that. We do feel that that's part of the salaries and wages piece. So it can be included, but remember there are a lot of restrictions that are on it that we'll keep talking through. So it's not just a sure thing. Don't do it without having the strategy behind it for your business. Also includes payment for vacation, parental, family, medical, or sick leave, as well as an allowance for a separation or a dismissal of an employee. And then it includes the payment for the employee benefits of group healthcare costs and retirement. And this piece, remember, is not limited by the overall compensation of the $100,000 salary. So that's a big piece. We want to make sure you really track this and monitor that as you go through the 8 weeks. And it also includes the payment of state and local taxes. This has been an area a lot of people have questions on. Again, this is a state and local tax. So you won't include a fee. Like here in Minnesota, we have a fee that's also run through payroll. It's only the state unemployment. And it's also not any income tax withheld by the employee. So the excluded piece, this is a big part we want to make sure we pay attention to, right? We don't want to submit things that they're going to come back to us and say no on. So if you have any employees living outside of the US, they are not covered under the PPP program. Any employee who has an annual salary in excess of $100,000, we have to only allow $15,385 for that single employee during the 8-week period. So again, limited to the $15,385. And then if you had qualified sick and family leave wages that got paid out and you took the credit under that Families First Act that we saw during round 2, make sure you don't include those in your forgiveness piece. Continuing on with the eligible payroll costs. They now are, like I said, costs paid or incurred during the 8-week period, which is that cover period I talked about, the CP. They are considered to be paid on the day the paychecks get distributed to the employees or the origination of the ACH. Make sure you know now that considered incurred is a big piece, that it's on the day the employee's pay is earned. But what they put in here for us, if it's incurred and not paid by the end of that 8-week period, it's eligible if it's paid on or before the next regular pay date. Because remember, at first we were like, oh, we're going to have to run these special payrolls at the end. And thankfully, this guidance helped us with that. But if you don't have any of that that relates to it, just remember, you need to have it paid during the covered period otherwise. And then again, reiterate, you're going to see this a few times. Remember, we cannot exceed the $100,000. So the maximum amount per employee is that $15,385. Make sure though that you're not counting payroll costs that are paid and incurred twice. So it's, you know, that one or the other if you're using the and. I'm sorry, everybody. Here I have to give you what I find to be not the best information, or maybe the one that made me a little bit sad as I read through this. For owner employee or self-employed, which again could be a partner of a partnership, they don't have really good definition of it. You cannot, again, I'm going to say cannot exceed 8 weeks of your 2019 compensation. So you take your 2019 compensation, divide it by 52 weeks times 8. That is the amount that you can enter for the owner, employee, partner, or self-employed as for the forgiveness piece. And this is actually in the certifications themselves that I talked about earlier that we're initialing off on. So it can be missed, you know, by those that are reading through this 11 pages, but it is a big deal. Maybe we'll get additional guidance that'll loosen this up a bit, but right now we need to all make sure we're monitoring that as we're using the funds during this period. And that brings us to the calculation of payroll costs. So on the application itself, we have to tell them obviously what we spent on payroll because that's the biggest piece. So here I'm going to talk about the employees and the pay that you're giving them, which is on the PPP Schedule A, is within those 11 pages. And that's used to calculate all of our payroll costs. And it gives us, lines 1 through 5 on that worksheet. Use tables 1 and 2. So again, we're going to be in different places as we're calculating things and moving numbers from tables to forms and then forms to applications. So on table 1, this is for employees that you pay less than $100,000 to annually during 2019. They want to see everybody, you guys. So you're going to be listing every employee this is not for owners. So this is going to be just your employees. Make sure you're not including, like I said, no owners. You will not include independent contractors. You won't include any self-employed individuals or the partners. And then they want to know, based on the Social Security number or ITIN, the last 4 digits, you're going to include all compensation to them. And again, it's the compensation paid during that 8-week period for each individual. And then we're going to go into more detail on how do you calculate the FTE count. But now, based on the guidance, you're going to have a value between 0.1 or 1 for each person. You're going to give what their FTE count is on this table. And then you'll go through and will there be any salary, hourly, wage reduction? What I want to say first and foremost to this, you guys, is that we're in control, right? We're doing the strategy. We're the one paying our employees. Let's just make sure we're being very careful per person that we're not reducing their pay, because then that just throws us out completely. So again, we will talk about this in more detail, but that's the note I want you to make. Make sure you're paying everybody the same pre-COVID pay as you are during this 8 weeks. And then we still have some reduction exceptions that we get to share with you that are new and are helpful, as well as go over the safe harbor again, and that will come on later slides. Why not show you, right? I want you to see what we're looking at. So this is actually 2 separate sheets. The top part, the PPP Schedule A, gives us the boxes that we're going to complete based on the 3 things I told you, that what we paid them, the FTEs, and then if there was any reduction. And then you'll see in table 1, that's where all the details will get laid out per employee. And then one thing that is super helpful that we hope happens is we've got a group that's working together with the AICPA, which is our National CPA Association, with the payroll companies. They're very hopeful that they'll be able to pull together this information within the payroll systems to give us a schedule. So everybody, fingers crossed, talk to your payroll people, make sure they're working on this and working hard. But at the same time, I'll tell you, make sure you send it across your accountant's desk before you send it to the bank, because we have seen on the application side, a lot of them were wrong. And then that takes us to, still on the Schedule A, but to Table 2. Now this is for all those who made more than 100,000. So again, remember we have 2 separate tables based on how you paid them. Those under 100, those over. So Table 2, you're going to list the same things I talked about on Table 1. And then for the same with the FTE count. And then note on this one though, you guys, we don't have to take that wage reduction, because if anybody who's paid over 100,000 gets a pay cut, we just don't have to worry about it. So on this one, at least we're taking one of those factors away. And then same thing, we still have the reduction exceptions and safe harbors that we can take into account. So I'll show you on this one as well what it looks like. A little bit shorter because we got to take out that wage reduction piece. So Table 2 looks a lot smaller, just needing to enter the compensation and their FTE. And then same thing on this table. And as you'll note, they don't expect people to have many employees. I mean, this is the table right out of the actual 11 pages. All they want you to do, you guys, is attach another schedule. So again, that schedule might be just you copying and pasting in Excel, or it might be from your payroll provider. And next, that brings us then to the rest of the lines on the PPP schedule as it relates to our payroll costs. So above we talked about wages and tips and bonuses and things, but remember, we have, the good news is we have other payroll costs that get added in. Now, line 6, the contributions for our group health insurance. So a lot of people have said, well, what if I don't have a group health insurance plan? As of right now, it's pretty much just black and white. It has to be a group plan. And then they just made a note, make sure you exclude any of the pre-tax or after-tax contributions that your employees are making. So again, it's just the employer portion. This is not limited. by that $100,000 cap. So you will calculate this for every one of your employees. Line 7 is the employer contributions to the retirement plans. Same thing, don't include anything withheld by the employees. And the good news on both of these is that incurred or paid piece. So it did loosen that up quite a bit for us. And then line 8 is just that state and local taxes again I talked about. Again, it's the state unemployment, not the fees. And you will not include any tax withheld from your employees. And then line 9, here's where we separate out the amount paid to the owner specifically. So the owner, employee, self-employed, general partners. Same thing, we get capped at that $15,385 because we can't do any more than the $100,000. But at the same time, we have to do the calculation of what you got paid as an owner in 2019, divide it by 52, times it by 8. You have to take whichever is lower on this line. So again, if there's more than one owner, because they're expecting only one on the form, just include a table for this and then enter the total on line 9. And now with the FTE count, as I said, we got a new definition from them. Many of you have heard from us and you've seen in articles and on our other webinars, we've been saying we're using 30 hours a week. On the form, they deemed it to be 40 hours. So what that changes is we're still having to calculate this based on the base period and the 8 weeks. So it's still going to be apples to apples. That's the good news. So what you're going to do is take the hours for employees that don't have up to 40, and you're going to divide it by 40 to get your FTE number, and you get to round to the nearest 10th. So with the math, the example would be if they are 8 hours a week, they'd be a 0.2 FTE. If they're 60 hours a week, they can only be 1. So again, no one over 40 gets to be added for anything more than a 1 for an FTE. But now something new. So again, if you're just listening in, kind of wondering when to take notes, here is something new. A simplified method is now allowed. So you can take just everybody who's over 40 or more, just count them 1 FTE. Anyone who's under 40, you can call them 0.5 FTE. So example would be if you have a lot of people under 20 hours, this is a pretty good and lenient rule for you. 8 hours gets to be 0.5 FTE. 60 hours is 1 FTE. But then at the same time, 32 hours would be 0.5 FTE. So as you can tell, a little bit algebra here. Those of us accountants love math, so we're here and can help you with that. But it does, for some, create great benefit. Others, it's not really that helpful. And then we need to make sure that the consistent method is used. So once you decide what you're using, you just need to use it both on that base period and during the 8 weeks. And we still have the safe harbor piece, so that did not go away. And then our non-payroll costs is now, so you don't have to keep listening to me the rest of the time. We get to have Chris the tax tiger with us.
All right, thank you, Stacy. So Stacy's talked about the payroll costs, and that's going to be most of what you spend this PPP money on, but the non-payroll costs are important too. So let's talk about those, and then I'll talk about the limitations, which can be a downer, but we've gotten some new information on those limitations, and generally they're trending in a more favorable direction. So that's good. So the non-payroll costs, we're really just looking at these costs cannot exceed 25% of the total forgiveness amount. If your rent and utilities are low, then, I mean, maybe it's only 10% for your business. Maybe it's 5%. Maybe it's just a really small number, in which case, that's great. You'll have more money left over that you could potentially spend on the payroll. But the non-payroll costs in total, you're looking at the mortgage interest payments, and that needs to be obligations that were sort of placed into service prior to February 15th, 2020. Similar date on the business rent or the lease payments that needs to be in place prior to February 15th of 2020. And then that same date applies to the business utility payments. So they're looking at the electric, the gas, the water, telephone, internet, transportation they've thrown in there. We really are struggling with figuring out what that means. I think for a lot of businesses, it's probably a pretty small number, but it would be something to dive into if you do have a significant amount of potentially transportation costs, but there's really very little guidance other than they keep using the word transportation and whatever that means as a utility. So there's those three categories that you can use, and you combine them, and that's going to be your non-payroll costs. And they can be forgiven, but as long as they're less than 25% of the money that you spent from the PPP. You don't have to include these things. So for some businesses, you might look at this and you're like, well, I'm only at 10%. Other businesses have a little bit different model or in a different industry, and you might be looking at it like, my rent is way more than 25%. You're going to be limited to only 25%. And so you don't have to report every single rent payment, every single utility payment if you're way over the limit. You really just want to get up to the limit based on how much you've spent on payroll, and that extra amount, it's fine, but there's really no reason. You don't have to go overboard in trying to capture all of those. And one of the changes that's occurred, which is favorable, is that now if they're going to count just the amounts that you pay during your covered period, it now appears that paying things like your past due rent or past due utilities or your past due mortgage interest payment, they can qualify if they're paid during the covered period. So that's very good news. I know for a lot of businesses that are either shut down or greatly reduced, they had delayed paying their rent. And so maybe you're sitting here like, well, we actually haven't paid like the March and April rent yet. You can pay those during your covered period, and now it will count towards the forgiveness. And that's one reason why you might get closer to that 25% limit for the non-payroll costs, because you might end up with potentially like 3, maybe 4 months worth of rent into that calculation, which just increases your rent level and might give you more of a problem with that 25% limitation. For all of these, you're really going to need to be like keeping a copy of your lease agreements, keeping a copy of those invoices, having the ability to show they were placed into service prior to February 15th. The idea there being they don't want you to go out and lease a new property or lease a new copier or whatever. They only want to pay or count the existing leases that were on the books before sort of the COVID started to happen. So we've got the payroll costs, you figure those out. We've got the non-payroll costs, and that is sort of the combination of those is your potential forgiveness. But then they're going to go through and do a couple of limitations. And the limitations go in this order. First up is the wage reduction limitation. And there's a worksheet, and it's based on that table 1 that Stacy had showed. And so what they're looking at is if you paid somebody, for example, like $20 an hour in the first quarter, and now you bring them back and you're paying them $10 an hour, that's going to be a problem. You've reduced their wages, and if you reduce the wages more than 25% for a person, then this wage reduction limitation applies, and they're going to basically penalize you for having paid them less. This is the easiest limitation to avoid because you can always just pay people more. You are in control of how much they're making. So you can pay people more or equal to what they were making before, at least, so that this doesn't apply. And as we'll talk about it, this can really be a damaging limitation. And since it's so easy to avoid, we really would aim for every client to manage to avoid this one through a little bit of planning. One of the things that Stacy mentioned is that an employee that made more than 100,000 in 2019, this does not apply to them. So in theory, you could have an employee who made $500,000 a year, and you cut their salary to be $50,000 a year, obviously that's a gigantic reduction, but you're not going to be limited based on that. It's sort of a strange thing. I mean, 100 grand for a person can count in this PPP, and you could even reduce them based on that. So anybody who makes more than 100 grand, they're just not considered for this limitation. And then the other thing they've said is that they look at it on it's a little unclear if they look at it week by week, if you had a bi-weekly payroll, but if someone made more on an annualized basis than 100,000 for any one period, they are also exempt from this. So if we think about an employee that makes $1,000 a week, their annual salary is going to be $52,000. They're well under the $100,000 limit. But once a year, they get a bonus of $1,000. And so in 1 week, they made $2 grand. $2 grand annualized over 52 weeks would exceed 100,000. And so this employee would now be exempt from that wage reduction limitation. It's a little unclear if it's on a weekly or a bi-weekly. So bi-weekly would be twice as much. It'd be 38.46 is the amount. And so if they exceed that over the bi-weekly period because they got a bonus at the end of the year, then those people are exempt from this as well. So we think a lot of employees who get bonuses would be exempt right off the bat. In addition to anyone who made more than 100,000, they're exempt right off the bat. And so the leftover people, I would just really encourage you not to be cutting their salary by more than 25%, and then you should be okay on this one. The FTE reduction is a lot more work to manage. It's not quite as easy. You can't just always get around this, but we've received a good amount of flexibility in this application process, which I think is really, really going to help people avoid this FTE reduction. So the idea is that if you laid off people and you've reduced your FTE count, they don't want to encourage that behavior, so they're going to have this limitation apply. But the safe harbor, that's really the key thing. If you reduced your employees from February through April, and so that's sort of well, COVID hit, and so I laid people off, I furloughed people, I let people go. If you've reduced your workforce, then they're going to give you until June 30th to get back up to that same level. They're basically saying, yeah, we understand you might have furloughed people, you might have laid them off. If you want to get full forgiveness, you're going to have to staff back up. And so you have until June 30th to do it. You could hit that number sooner. So if like the stay-at-home rules in your state have lifted June 1st and you get back to 100% of your FTE count June 1st, that's great. But it could go as late as June 30th. So to the extent you restore the FTEs by June 30th, you won't be limited based on this FTE reduction. You won't be limited based on the fact that you employed less people potentially during your 8 weeks on average than you did last year. So the period for this is going to be either the covered period or that alternative covered period, but there are some exceptions. And the first one here we knew about, and that one is that if you provide a written offer of employment to those people that you furloughed or laid off, you offer to rehire them and they decline, that's not really your fault. You tried to hire them back. And so if you can document that, that person is not going to count against you for this FTE count and you'll be good to go. What they did with this application is they expanded that exception, and now they also are saying if you fired someone for cause during your covered period, or they voluntarily resigned, or they voluntarily requested like to go part-time, those people also are not going to count against you. So if example, you've got people and you've maintained your staff, or you went down a little bit, and then someone's just not working out and they get laid off in May, that person isn't going to count against you. Or if somebody was full-time and then they've got childcare issues or they've got other issues at home and they want to work less, you're not going to need to count them as like a 0.5 FTE. You can still count them sort of in the same manner they went into the calculation. So you don't get harmed based on what the employees choose to do. And so this one you can manage, but it's going to require more documentation on your part to make sure you've documented that you've offered these jobs, or you're documenting which people got fired for cause or which ones voluntarily resigned, things like that. So this has really ended up with a reasonable outcome, I think, and the rule changes here have greatly expanded these exceptions, and I think it'll make it much easier for people to comply and not have this limitation being applied. The third limitation in our list of 3 limitations is that 75% payroll cost that we've talked about. And this, it hasn't changed. So this might be one of the only things that hasn't changed in the last month or so, but 75% of the money that you spend needs to be on payroll. And this one applies after you've limited the other 2. So you got to first get through the wage reduction, and hopefully you're paying everyone the same, and so that one doesn't apply. And then the FTE reduction could ding you, and then you look at the 75% payroll cost limitation. So this is going to be on line 10 of the application. And you're really just looking at what is the ratio of the total payroll that was allowed versus these other costs. And maybe your non-payroll costs, maybe they're well less than 25%, in which case you'll be good to go. But here we can sort of see a little example. If your PPP loan was $350,000 and you only used $315,000, well, right off the bat, the maximum amount you can have forgiven is $315,000. You can't get $350,000 forgiven if you haven't spent like the other $35,000. And so then we're going to look at how much did you actually spend on payroll. If it was only the $216,000, well, you have not spent 75% of the total on payroll. You spent less than that. And so you're going to have an amount there that's not going to be forgiven. And the ways to manage that would be to spend more on payroll potentially. So you want to be charting out sort of, how do I think my expenses are going to go? And is this going to be an issue for me? If your rent is very, very low, then maybe it's not really a concern. But if your rent is substantial and those non-payroll costs are substantial, you're really going to want to chart this out and make sure you're spending enough on payroll to get or to at least understand how much of that rent and non-payroll costs you're going to have forgiven. So now that you've spent all of this money, you've managed to fill out this whole loan forgiveness application. You filled out the calculation form, the Schedule A, the Schedule A worksheet, Table 1, Table 2. You managed to do all of this. What kind of stuff do you need to submit for documentation? So you're going to take all of this information and you're going to give it to the bank. And the bank is going to be the one that sort of processes this loan forgiveness application. So for payroll, bank statements would be good, but really the best thing would be that third-party provider payroll reports. So that's going to hopefully document and tie out nicely to what you put on all of these other worksheets and forms to demonstrate sort of by employee how much was their compensation, how much was the compensation to the owner. So those payroll reports are going to be key. Certainly, They might be looking at, and they'll ask for like the 941, so just those payroll tax filings, and whatever you do for your state, so the employee wage reporting or the unemployment filings for your state, those will be looked at. So those are the kinds of things that will support the payroll expense. You also are going to want to keep certainly the copies of your payments or the canceled checks or the account statements that show things like the health insurance and the retirement plan contributions. So those statements, if you get, you're going to want to have like a May and then a June statement for the health insurance that ideally shows how much was the employer portion and how much was the employee portion, because the employer portion is the one that's going to count. Same thing with these retirement plans. You're going to want to have statements from the retirement plan that shows, all right, the employer contribution for all these people was $5,000, and then we've got the bank showing we've transferred the $5,000. So all of this goes together. I mean, these are the kinds of things you should be keeping anyways for just good accounting and record keeping, but you're sort of going to want to keep these specifically in an additional file. So do your normal record keeping, but then take a copy of this stuff and keep them separately so that you can package it all together nicely and submit it to the bank as we're going to request the loan forgiveness. For the FTE calculation, I think this might be one of the more challenging things to document because every employer is gonna do this differently. So you want to document how you came up with those FTE counts for the base periods, and they're listed here. And then there's different rules for seasonal people. I won't get into that, but you should be very careful if you're seasonal and make sure you understand those. So how are you going to document these FTEs? If you have good like hourly payroll reports, this will be easy. This will be super easy. You just look at those hours for the period and you divide by 40, and now you know exactly how much of an FTE they are. And you can either go with the per tenth, so you have 0.1, 0.2, 0.3, or you can go with the simplified method, which is just everyone part-time is 0.5. So if you have very good hourly reports because people are clocking in and out, that's great. If you don't, I think it's going to be a bit more challenging. And so certainly if you don't have good hours reports, I think those are the people that would probably want to use the simplified method. And then you're just going to try and document of my employees, which ones are full-time and which ones are part-time, and just leave it at that. And so any method that you have, if you've got sort of their employment agreement, stuff like that, to document which ones are full-time, which ones are part-time, that should work for the FTE documentation. And the time period on that is gonna align with your the PPP schedule for line 11. Other documentation that might help support that FTE would include those same payroll reports that we use to document that the payroll costs. That also might be used to sort of demonstrate those FTE counts on a per person basis. For the non-payroll costs, we're going to be definitely looking at having a copy of the lease agreement or the service agreement that demonstrates these things were placed into service prior to February 15th, 2020. So like your electric bill from January would help to demonstrate that you had the electric going in January and now you still have it here in May, June, July as you're incurring your expenses and then submitting for the forgiveness. For the mortgage interest payments, certainly an amortization schedule, receipts showing that you've paid those, and the timing of those payments, the account statements, that kind of stuff would be good documentation for the mortgage interest. And again, on the lease, like copies of the invoices for the month. So you're going to have both your lease agreement that you maybe signed 5 years ago, 10 years ago, whenever, in addition to like those monthly statements that show how much was due, and then your sort of canceled checks verifying you did pay the amounts on the statements. Same thing here for the utility payment. So all of those are pretty well aligned in what you need to document. They've definitely got other things that you're supposed to keep, but they do not need to be submitted. And so that's more the individual employee listing out each person. So those are the more detailed records that you can keep. And that's where we're also talking about the documentation, why someone got fired during the covered period, documentation that the employee requested a reduced work schedule, or documentation that you offered somebody the job and they declined it. So those kinds of things you need to have, but you're just not going to submit it with the actual application. All of the records that you keep related to this PPP loan forgiveness, they've said you are required to maintain it for 6 years. For some things, that's going to be definitely longer than you otherwise would be keeping them. So keep in mind 6 years, and I mean, I don't know if this is going to happen or not, but the SBA can come in during that 6 years and potentially look at it, ask for those files if they would like to. I don't know if they will or not, but that's why you're going to need to keep them for the 6-year period. So we've got a variety of sort of closing thoughts, and I want to start with just a review of some of these rule changes. These are sort of the 6 big changes, and we've talked about each of these, but these are the 6 big changes that came out with this application. That doesn't mean these won't change again, but at least these are sort of the new highlights. An alternative covered period for payroll can be used at the election of the borrower. So it's your choice. You don't have to do this, but you can. And that can be done to align with your normal pay period. It just makes things more convenient, but you don't have to. In some situations, I think it's going to be better to keep your existing covered period, the date you got the loan. And in other situations, it's probably going to be better to use the alternative covered period. Just depends on your situation, when you're paying people, how many people you had on payroll at the time you got the loan, and sort of, are you ramping up the payroll so you might have more at the end of your sort of period. Another big thing, so number 1 is good news. Number 2, bad news. The owner compensation is limited to 8 weeks times your 2019 payroll cost. We didn't think this was the case before, but now they're clearly going to limit you. So no raises or sort of no bonuses to the owner. You can increase the comp to the owner, you just can't count it for the forgiveness. And so if you can't count it for the forgiveness, I guess I'm not sure what the point of doing that would be during the 8 weeks. You certainly can do it. It's just not going to count for forgiveness. So that one is bad news. Number 3, the payroll costs can be paid during the covered period, or they can be incurred and then paid during the next normal pay period. This one is good news, and it is going to save us all from doing these short period payroll runs that we thought we were going to have to do. Because before we thought everybody's going to end up running this payroll on day 56. Now that's not the case. They'll just let you count it as long as you pay it with your next sort of regularly scheduled pay period. So that's a nice bit of flexibility. The non-payroll costs, this one is also good news. So now you can include everything that was paid, or incurred. And so we're going to end up collecting or including the back rent or the overdue utilities if it gets paid during the covered period. So that's definitely good news. FTE definition has changed. I'm not sure if this one really is good news or bad news. I just find it aggravating that they changed the rule again on this. So now we're looking at 40 hours, and the simplified method is a nice option. So before we didn't really have any options. They just said, well, you got to figure this out. And now they're saying, well, we'll let you use the simplified method. You can count all of the part-time people as 0.5 instead of trying to sort of recreate hours reports if you didn't otherwise have them. So the simplified method is definitely good news that you have a new option. And the 40 hours, it's really not good or bad because it's going to apply now, but it's also going to apply to your base period. And so it should work out equivalently. So it's not necessarily good or bad, but the flexibility on the simplified method is definitely going to help people be able to calculate those FTEs. The last new item here is the exemptions for that FTE reduction, and this is definitely good news. It sort of quantifies some of the things that we'd hoped for, because as we've been talking with clients, they're like, well, somebody resigned, they moved away. Does that hurt my FTE count? Well, now the answer we know is no. As long as you can document that either people declined the position, they're fired for cause, they resigned voluntarily, they reduced their hours during that covered period, those people aren't going to count against you. So that's definitely good news. So on the whole, there's 6 things here. I would say maybe 4.5 are good news, and 1 is definitely not good news. But overall, this has made things a little more flexible, a little more generous, and so we certainly welcome changes like that. There's, I'm not sure if you saw it, but we just want to hit on a few other things. If you're a partnership that applied for a PPP loan and you did not include partner compensation, you should go talk to your bank immediately and see if you can get that amended. They came out with some guidance saying that you would be able to essentially amend that and potentially get more PPP money. So that can be good news. Also for seasonal businesses, if you weren't aware, you didn't have the right calculations based on the new seasonal rules, you could potentially go back and get more to sort of right the wrong on that. For other incorrect applications, you can't fix it, but for those couple of items, you can. What do you do if you don't get 100% forgiven? I mean, that's certainly okay. The amount that is not forgiven, either because you didn't spend it or because one of the limitations applied, it's going to become a loan. You can pay it back whenever you want. There's no penalty for paying it back early, but the loan is a 1% interest loan. Right now, it's amortized over 2 years. There's 6 months of deferring. And I mean, you still need to be using it on the payroll. So the qualified expenses rules still apply once it becomes a loan. But I mean, you should have payroll. So you just keep it set aside and use it for payroll and you'll be fine. It's certainly a very low interest rate loan. And if the business is in a good cash position and you're like, I would prefer not to have this 1% loan accruing, you can certainly pay it back whenever you like. So we have a lot of clients with PPP loans, but we also have clients with these EIDL advances or the EIDL loans. It is possible that you could have all 3. It's possible you only have 2 of the 3, or it's possible you just have the PPP. So let's just talk about that briefly here. The EIDL advance is on this application, and it says, if applicable, the SBA will reduce the loan forgiveness amount. If you got both the PPP and the EIDL loan, you should be using those for different things. You don't have to use the EIDL loan right away, but you certainly can. You just need to use it for different purposes. So if you got the advance for the EIDL loan, we would suggest you use it like an EIDL loan and not use it for the payroll. And use the PPP funds for that payroll during your covered period. If you haven't applied for the EIDL yet, they're basically closed. It's only agribusinesses now. You do want to track these loans separately. And for the documentation, we do strongly recommend that the PPP loan be in a separate account, and then you reimburse yourself. You basically reimburse your checking account when you incur those forgivable expenses for the PPP. The EIDL is not quite the same, but we would definitely recommend you keep it away from your PPP so that you can show you're using it on different things when you do use that EIDL loan. The EIDL loan is more of the long-term debt. So those are going to be 30 years. And what we've seen now or recently is people who have applied 6 weeks ago are starting to get them, and they're being limited to 150,000 on that EIDL loan. So just a little bit on that. If you haven't heard yet, you can reach out. I can't guarantee they're gonna move you to the top of the list, but we have had clients have some success in finding out sort of the status of their EIDL applications. So there's the email or the phone number where you can try and reach out. So we got some new guidance with this application, and that's been very helpful. I want to identify a few of the areas where we lack guidance and we really don't know, but we're hoping we will get this guidance. We're not sure when we'll get it, but I just want to identify and be clear that the things we know could change, but there's still a bunch of stuff we don't even know, and they haven't even taken a stab at helping us with. So here are 8 of them. We'll just run through quick. They've said now that the owners can't increase their payroll, but what if the business is owned by a spouse and both spouses are working? Can you increase the wages to the other spouse and have it count? We're not sure. What about other family members? We're not sure. There's a little bit of question now as to whether the health insurance or the retirement contributions for the owner qualify. I think they do, but the way it's been presented, it's now a question, and before it really wasn't a question. We thought it qualified, and now it's like, well, I still think it qualifies, but I think it's something they could clarify because they made it muddier with its last application. So the alternative pay covered period is great, but what does that mean if the business is closed? When is your next normal payroll? I don't know. If you were doing bi-weekly payroll before, but then you haven't run a single payroll in 5, 6, 7 weeks, when does your next normal payroll period start? We're not sure. So some clarification on that would be helpful. Some items are saying paid, others are saying paid or incurred, and just a little clarity on some of that. For the Schedule C businesses, there's been a little bit of conflicting guidance whether you need to actually sort of take the money out that's considered the cost to yourself, the 850 seconds of your Schedule C income. That's what counts as forgiveness. I don't think you need to actually transfer the cash to yourself, but I think there's a little bit more clarity that we could certainly have. For Schedule C folks, it doesn't appear that the health insurance or retirement plans count. I'm not sure that makes sense as an answer, but so I think a little clarity could be helpful. As I mentioned before, what does transportation cost mean? How do you have a transportation cost that's been placed into service in February? How does gas for a car? How does that work? And then another issue with some Schedule C folks managed to apply with their 2018 Schedule C. The forgiveness is supposed to be based on 2019. And so are they going to have an issue with one of the certifications about consistency, that you need to submit consistent information in your loan forgiveness that you're also submitting to the IRS. So an example of that would be like, if you give a 941 to the bank for your loan forgiveness, that has to be the same 941 that you actually filed with the IRS. And so what happens with these Schedule C situations? I'm not really sure, but it's a good question, and maybe we'll get guidance, maybe we won't. The last thought here as we wrap up is that Congress is still working on new bills. The HEROES Act came through the House last week. It is 1,800 pages long. It is not going to make it through the Senate, but parts of it probably will. We're just not sure which parts. There's also some separate proposals in Congress to give you a deduction for the costs in the PPP, even though they're going towards the forgiveness. I do think there's a pretty good chance that'll pass. Congress is looking at other ways to sort of ease the burden on this, because they realize there's a lot of restrictions on this and it's unclear and it's really not properly motivating businesses that are closed. So they're looking at ways to do that. One way that I think might happen, but it's too soon to tell, is if they expand or extend the 8 weeks. That would obviously make it way easier to spend the money on payroll if they gave you 10 or 12 or even 24 weeks. I mean, that would be a game changer for all of the strategy. It would be a game changer in terms of spending the money. And that hasn't passed yet. It's just talk, but at least they're talking about it. And so things are they're moving in the right direction, it seems like, towards more flexibility. We're getting more guidance every day. And so it's just continuing to go, hopefully, in the right direction towards a better answer for a lot of taxpayers who are struggling along with us in trying to keep all these plans up to date. And so with that, I think we'll wrap up, and we'll just say that, we're all here to help you sort of manage these. We'll post the recording of this, but you've got our contact information here. If you have questions, please reach out. I mean, our goal is to help businesses understand these so that you can make smart decisions. You can make strategic decisions in terms of how do you manage away from some of these limitations? How do you spend the money in a way that makes sense for your business? And every business is a little bit different. So you really want to plan out how this is going to go for you, and then be able to adapt that plan if and when new guidance or new rules come out. So with that, I will kick it over to our MC, Nick, for a little bit of Q&A.
Okay, thank you, Chris. I'm going to give you a break because we've worked together for 13 years, and I think that's the longest I've ever heard you talk. So good work. Go get a glass of water, and I'll kick a few questions over to Stacy to get started. And while Stacy, oh, you're prompt, you're already up. But before I throw out the first question, we're already over 150 questions out there. A lot of those have been answered, but just know we're trying to get to them. There's a lot of kind of duplicates, so hopefully we'll be able to grab your question in one of these that we are asking. So Stace, let's start out with some FTE questions. A couple related to that is if our full time in our office is only 36 hours, is that a full FTE or is that a reduced decimal of an FTE?
So you guys, that was where I said we're going to round to the 10th. You would use that for sure on 36. You don't want to give yourself the half. You'll calculate what is your FTE count for that employee. You're paying them 36 before, you're paying them 36 after. Great news is the math works out the same. So good question. I'm glad we can put some more examples into this for you.
And on the initial PPP application, there was a spot where they asked for FTEs. Is that the number we're tied to, or what did that number do?
Okay, you guys, that one was very confusing. Before the very first application, none of us even knew what they were asking. They clarified it to be more of a head count. So that literally was how many people have you paid? You're just counting literally number of W-2s you filed. That was not an FTE count. So then they came back and said, hey, guess what? Do some more math now. Figure out your base period FTE And you saw there's some different dates floating around for that. And then calculate the same thing for these employees during the 8-week period. So good question. A lot of people are worried about that number on your application just needs to go on to this forgiveness application because you already included it. So you'll want to keep your initial application close while you fill this one out because you're going to pretty much transfer a lot of the same information to get started.
Perfect. And lots of questions on the reduction in wages also. So if I am offering the same rate to somebody, but maybe they didn't get as much overtime as they used to, or, well, actually, let's start with that one because that's probably a different scenario than the next two. What if they just didn't get the same number of hours? Is that a reduction?
You're going to go by employee to calculate each of these. And that's where I think Chris had on one of his slides that you can get through this pretty easy. Don't give them a reduction in the wage you're paying them or the hourly rate or the salary. So give us a call on that one because I think we could talk you through 1 or 2 employees and that one would make more sense versus trying to talk through it.
Perfect. And that also piggybacked, several people were questioning people that are on commission. They're making drastically less now, or even like tips for that matter, kind of the same idea. Would that fall under the reduced forgiveness because they're not earning as much?
So what we did through our strategy sessions, and for those of you that had them, thank you for reaching out. We're glad to help, is we helped calculate that. What should we be paying them? Because remember this PPP, the funds are to help you get your employees back employed to the pre-COVID numbers. So we want to try to do that in our strategy for the post 8 weeks. So again, some of this is not just a quick Q&A answer, it is business by business related. So do reach out. We do want to help. You've got a team of 7 people listed here who have a passion to guide and assist you.
Awesome. So a few different questions on prepaying items. Can we prepay more wages? Can we pay people ahead for the next payroll towards the end?
So the question on the prepaying payroll, it again has to be earned. So that's the part that you'll be held up on for prepaying that is they have to have earned those wages. So just again, keep that in mind as you come through the end of your 8 weeks.
Great. And does HSA contributions, if they're the employers, do they count in forgiveness?
There's nothing that states we get to use the HSA. So at this point, what I'm telling everybody, if you're wondering, should I include it? In your tracking spreadsheet, literally add I wonder if this can be included, just track it. So administratively at the end, if we get more guidance that literally just opens this up as a free-for-all, then you have that done. Don't reimburse yourself though. So as we said, you have a separate account and you're doing reimbursements. Until we know for sure, track it, but don't reimburse.
Awesome. And probably the most common one I get on the non-payroll costs, do cell phones count? They say telephones, but do cell phones?
So if it's in the business name, I know a lot of people, you might be reimbursed employees for cell phones. So if you've got an actual plan with the business, then I would include that as telephone cost.
Great. Let's see if that was enough of a break for Chris. I'll stop the rapid fire at Stacy and give you a little bit of a break. All right, Chris. Thanks for flagging a couple. Do we know how long do we have to submit all this information if I'm not in the mood to look at this application for a little while?
Yeah, that's a good question. We're not exactly sure, but it would appear that when your 8 weeks is over, as soon as you can gather the information, you could submit it. The application itself does not have like a due date per se, but it has an expiration date. We just have no idea what that means. And the expiration date is Halloween. So October 31st is the expiration date. Presumably, you would want to have your forgiveness application in by then. But I don't know what that exactly means. That would be my goal, is to have it in probably in July or within a month. Certainly the banks will be swamped, I'm sure, with these loan forgiveness applications. We don't know how long the bank is gonna sort of sit on it, but I would try and get them in reasonably soon.
And a lot of people have that June 30th date that we need to wait until that passes. So filling it out right now, you might not have all your information.
Yeah, I mean, you really need to wait for your 8 weeks to finish so that you're sure you've captured all of your expenses. And as we learned in the application process, like even after your 8 weeks, you could be paying that next payroll after your 8 weeks is up. So that might be a few days after your 56 days even.
And that actually leads right into a common question is, can we pay utilities, health insurance, maybe even mortgage interest ahead of time?
No. Stuff needs to be incurred. So that goes along with the payroll. These costs need to be incurred. So you can't prepay, and they were very clear about the mortgage stuff. You can't prepay either, but the costs have to be incurred. So you can't just say, well, I'm going to write AT&T a check for $10,000 and that'll cover my telephone bill for the next 2 years. It hasn't been incurred yet, so it won't count.
Perfect. Was there any language in the application instructions talking about what level of ownership counts as an owner? There's a lot of questions about, like, does a 2% owner count? Are they going to be subject to the owner threshold limits?
They have not defined what it means. They just said owner-employee. So at this point, we would say anyone who owns even a single share of equity would be considered an owner-employee. And so even if you owned like 1% of an S Corp, I think they're saying that rule applies to you and you cannot pay yourself more than you made in 2019.
Seems fair. Do copier lease payments count in the non-payroll cost?
Yeah, that should be fine. So you could have rent on real property like the building. You could have a lease on potentially like a car in the business's name, or a copier or computer servers or stuff like that. That should all count if you have a signed lease agreement prior to February 15th.
Okay, and several questions on owner's pay. Lots of owners are taking payroll as they can, or maybe it's very cyclical. Is there any picking and choosing when we look, or do they just look at the year 2019?
It appears they're going to look at the whole year 2019, and they're, essentially going to look at that more or less box one wages to yourself and say just 850 seconds of that amount, whether you're a partner in a partnership or an employee like in an S Corp. If you're an owner, I think that's how it's going to work, is just the full year. Whatever bonuses you had, those are included in your full year number, and then you get 8 weeks worth of that. It's
Great.
It's the same concept for the self-employed people, where they just look at your Schedule C for the year. It doesn't matter like how much you made when. It's just your entire Schedule C for the year times 8 divided by 52.
Great. So they just aligned the rules to make it, quote unquote, easier, I guess, hopefully. Couple other questions on the payroll dates and the paid and incurred. If I got funded on April 17th and I had a payroll hit the very next day, that one could potentially count, and I could count that last one, so I could maybe sneak an extra payroll in there. Is that correct?
Yeah, that's our understanding. That's what it appears like. This rule change allowed. That was not under our understanding last week.
No, definitely not.
And maybe it won't be next week, but that's the understanding right now.
Great. I think I will give you a break again and jump over to Stacy if you could hop back in. All right. Couple questions for you on employees leaving. If there's a $10,000, doesn't matter on a dollar amount, I guess, but if we paid someone a severance, does that count? Is a severance part of payroll cost?
They state that it is. Again, have that documented. So everything we talk about is that documentation piece. So what was the reason for the severance, and was it during that 8-week period, and show the payroll paid? I would just keep that for your records, and definitely hold that for the 6 years that they talk about with keeping documentation.
Perfect. And several questions from people. If we have multiple different companies where maybe it's the same owner and all of them, will the IRS or will the forgiveness be looking at them as a whole? What if they earn 40,000 in 3 different entities? Are they going to be limited on that, or is it looked at by entity?
Well, now that we know that we're giving them a table and tying the social security number to it, I worry a lot more that will get matched up. Will it happen? I don't know. Honestly, the banks are the ones that are going to have to take this and turn it into the SBA. I think you may want to see what a banker, answers it as well. And I apologize, there's no good guidance on it, so we do not have a good answer today. Same thing, put it on the, maybe could be included line, but don't reimburse yourself until you know if they're going to allow it.
Yeah, that's a great point. For the June 30th date they referenced, was there any clarity around that? Does that mean we have to pay people on that day, or do they have to be hired back by that day, or document they worked that day? Do we know much about that day?
Oh gosh, if only we did, you guys.
No.
We've been living this June 30th date forever, and it doesn't say, so I think those of us that need that safe harbor, we are going to be putting alarms and, all sorts of things on our calendar for June 29th to make sure on the 30th we're documenting that we're paying everybody that we needed to make our FTE and wage amounts, and then turning in our applications after that. Will guidance come? Who knows? At this point, it's 50-50. Some things we get guidance on that we didn't even know we needed it, and other things come at the moment we need them. So stay tuned.
Very true. That's our answer a lot right now, and it's unfortunately it changes, like Stacy mentioned. It's literally changed several times in 1 week on a few different rules. Looking at this 8-week period, for employees that might be, I guess it doesn't matter, commissioned or what have you, do they look at the $100,000 limit across the whole 8 weeks, or do they look by pay period, or do we know how that one is going to work?
So that's where we're going to be limited to that $15,385. And so again, we want to look at that person by person and at what that limit will be.
Great. So they'll look over the full 8-week period. And, okay, got it. Let's see. Sorry, these questions are moving around just a tiny bit as people pop in a few other ones.
I had one, Nick, that I knew I wanted to answer that I can speak to because I didn't probably make it clear enough. When we go through the lines 6, 7, and 8, where we have the unemployment tax, the contributions for group health and retirement, does that count for the owners or those over 100,000? Yes, it does.
Great. And kind of related to that, several different questions. There's a reference to a 401k, a simple IRA, and a few other retirement plans. Can we start prepaying those for 2020?
So what we need to have everybody do is talk with your financial advisor or read through your plan. So if there are restrictions in your plan that will make you look at a December 31st date, you need to be very leery of that. If it's, more of a generic, plan and you could get some of it into this 8 weeks, do that, but please make sure you're checking with your advisors.
Great. And what happened on this $10,000 advance? There was so much buzz that this was going to just be a forgivable, here's 10 grand. Did that change?
So what it says on the application is that everybody needs to enter the amount that they received for the advance. So that's going to be on that application form on the face of it. And then the SBA says, if applicable, we'll reduce the amount forgiven. Those that got the advance first and were able to tell the bank that they got it, it actually reduced the amount they got on their PPP loan. So I think what they're doing on the back end is just correcting it in the forgiveness piece of it. Will this change? Will we get more guidance? Possibly. So what we've been saying is if you got that idle advance, the, per employee headcount, maybe you only got 1,000, maybe you got up to 10,000, use it for different purposes than the PPP, such as working capital and items like that. And again, add it on your worksheet as a maybe it will or won't be forgiven. So that way you're in the clear if it does come out that we get more guidance.
Great. A couple different questions under the self-employed area, which I guess would apply to partnerships or single member LLCs. How are we going to measure that in 2019 if I didn't give myself any regular check or any regular pay? What is that amount, or how do I know what amount gets forgiven?
So we take your 2019 Schedule C, take your net income, And what you'll do, obviously you got more on the front end because you got the 2.5 months for the loan itself. You'll take that net income number, divide it by 52 and times by 8. That's the amount that you get to use to pay yourself. And that can just be, give checks to yourself. But here's the question, what we're maybe not fully clear on and hope we get more clarity is, can you include other costs in that? And again, track them so that you have them in your sheet, and hopefully we'll get more guidance on that so that we know maybe you can get more forgiven than just that 850 seconds of the net Schedule C. And I know a lot of people were asking, is there going to be another webinar just for self-employeds? At this point, this guidance we have today is what we have related to the forgiveness. So this really is applying to everybody, the nonprofits, the churches, the self-employeds, the businesses. And if more comes out, we will do another webinar. So stay tuned.
Awesome. Chris, if I could have you come back on, got a couple specific questions for you. This one was somewhat answered earlier, but if we have owner employees that are just working part-time now, because we can't fully be open, maybe a restaurant or a brewery or a salon, are they included in the forgiveness, or is this going to be a wage reduction? And are they limited? Sorry, that turned into a 4-part question. I can try to break that down, or you can just start spitballing your answer.
I mean, the owner employees are treated in most ways the same as an employee. They count as an FTE. They still count as an FTE. Their wages count, but the extra limitation on them is that you cannot pay them more than the 2019 compensation they had. You could pay yourself less. I don't know if that's a good idea. That doesn't seem like a good idea to me. It seems like you should use the PPP money to maintain your salary. But in theory, you could pay yourself less. I don't think I'd want to do that though.
Very good plug. Is there's still so much planning behind all of these answers that there might be a really good business decision, and hopefully that's always going to override what you do with the PPP, but there's some instances where that isn't what you're going to want to do. So just reach out. There's 7 of us, I think, on this page, or 8 of us, and we're all very happy to help. I just had my other question that I was going to pull up for you. There's a few seasonal businesses that, luckily, I don't think it's technically a seasonal question, but in the pay period of May, let's say it's a landscaper, their employees are earning where it'll look like they're making well over 100 grand in a year, but since they're seasonal, it'll never hit that amount. Is it still limited to the 15,385?
Yeah, so you can't go over the 15,385 for the 8-week period in total. Even if they maybe work very reduced hours the rest of the year, and for the full year they're not going to hit 100 grand, it's still the 15,385.
Okay. And can just reiterate what you had done on some of those closing thought slides. As an owner, are we able to include simple IRA contributions on our behalf, health insurance, all of our owner benefits?
So it's going to depend on what kind of a business you have, but as an owner, the group health paid for the owner should count. As an owner, contributions to an employer plan or employer contributions to the plan, we think should count. I think there's a potential for more guidance there, but right now I would include those. But if you're a Schedule C, it would appear that the retirement plan and the health insurance does not count because those do not appear on the Schedule C. They get reported in other places in your tax return. So I think it can even depend on whether you're an S Corp, a partnership, or a Schedule C.
Great. We understand that there could be very valid reason to give employees raises or bonuses during this time, and it could actually help our forgiveness. But is there any language in there about like if it's reasonable, or does this have to be in normal operations, or is there any limits on bonuses basically?
There's not specifically any limits on bonuses, and I do think that's going to happen a lot now, especially given if you had laid off employees or furloughed them and they're collecting unemployment now, and their unemployment benefits might be pretty high with the extra 600 a week. I think some bonuses or hazard pay that maybe you've heard about, some big companies have been doing this hazard pay. I think that stuff is reasonable, but with everything, uh, reasonable is in the eye of the beholder. And so if you were to sort of give people a bonus to come back to work, to rehire, that seems fine. And it's certainly, there's no specific exclusions or reasons you can't do that. But if you were to say give a bonus of $10,000 to your high school student who is the receptionist at your company, I don't know that that's reasonable. That doesn't seem reasonable to me. So you might want to not want to do that. But even that, there's nothing specific, no specific guidance on that. So whatever is reasonable, what's ever in the normal course of business, and understanding that business is not the same as it was before. Maybe you didn't typically give people a bonus or increase their pay right away for like new employees, or give bonuses to hire people, but now is not exactly normal times. And so, especially with the unemployment benefits being as high as they are, I think that stuff seems very reasonable.
I've seen lots of people saying they really miss when we were back in the precedented times, because all you ever hear right now is we're in unprecedented times, and I really miss those. But Stacy, if I could have you hop back on, I know a good question for you, because I know you have a lot of knowledge and passion on this one. This is technically not exactly on the forgiveness, but there was a lot of murmur and rumors flying around about this new FAQ that came out about economic uncertainty and applying for the PPP loan, and this $2 million threshold. If we have one under 2 million, there was a common rumor that you're just not, the SBA won't even look at it, whatever you give them they'll be fine with, but over 2 million, they're gonna audit. Is that true?
So that is what got put out by the SBA, but will everybody under 2 million be in the clear? We don't believe so. Whether it's the SBA doing the audit or another governmental agency, we just think make sure you have everything documented. If someone had a great question, you guys talked about this impact statement. I don't see it anywhere in this presentation. That goes under the documentation you should hold on to that doesn't get submitted, and be sure to hold it for the 6 years.
Perfect. And I know the wording also changed briefly, that it used to say economic uncertainty, and then it switched to unless you happen to have some other source of funding, and then it seemed to kind of go back to the original wording. Do you know what's the current, if they haven't applied? There are a few people out there that haven't fully applied yet because there is some money again. Is economic uncertainty still the rule?
It is. So they did go back to that to loosen it up. So obviously we had a lot of big companies that figured out how to get through the loopholes, came in, grabbed PPP funds, had lots of liquidity because they're public companies. And so then they said, someone asked, does this apply to private companies? SBA says, yep, see the same thing. Well, luckily they came out and were like, you know what, we are going to consider your initial certification if you're under 2 million, that you are doing this in good faith. So it loosened that up a lot for those under 2 million. So same thing is, if the PPP loan funds are needed and you're using it to pay your employees and keep them employed and off of unemployment, you're using it for the right reason.
And that's a great plug, just to kind of wrap us up, because we're 1 minute or probably 30 seconds away from being done. So I'm sorry we didn't get to everyone's questions. Please reach out. This is all we've been eating, breathing, sleeping, dreaming about for the past 8 weeks, I think. I don't know. It's honestly kind of a blur. But if Stacy, you just want to do a final farewell and lead us out.
I would be glad to do that. Again, you guys were in, like he said, this unprecedented times, so much unknown. The amount of you that are just working around the clock, 24 hours a day, where before you had a normal job, and now some of these rules are really limiting you. And just make sure, reach out, use us as your advisors to help answer some of those questions that are keeping you up at night. and know that we are following this. We will keep putting out guidance, whether it be just in a blog update or a webinar. So know that we are here for you, and do rely on us as much as you can to try to take that stress from yourself, so you can now focus on the next steps once we get released. And I see Chris is back. Chris, any final thoughts for everybody? He's given us a wave. Thank you all.
Bye, everybody.
Bye.